If you're like most Americans, you're probably overpaying on your taxes. In fact, the IRS estimates that millions of taxpayers are leaving billions of dollars in unclaimed refunds on the table. By using the right tax strategies, you can keep more of your hard-earned money. For example, the average taxpayer can save around $2,500 per year by itemizing deductions. This can add up to big savings over time. One of the most powerful tax hacks is to max out your tax-advantaged accounts. This includes 401(k), IRA, and Roth IRA accounts. By contributing to these accounts, you can reduce your taxable income and lower your tax bill. For example, if you contribute $10,000 to a 401(k) account, you can reduce your taxable income by $10,000. This can save you around $2,000 to $3,000 in taxes, depending on your tax bracket. Another tax hack is to take advantage of the home office deduction. If you work from home, you can deduct a portion of your rent or mortgage interest as a business expense. This can be a big tax savings, especially if you have a large home office. For example, if you have a $2,000 per month mortgage payment and you use 20% of your home as an office, you can deduct $400 per month as a business expense. The Earned Income Tax Credit, EITC, is a tax credit that can provide a big refund to low and moderate income workers. To qualify for the EITC, you must have earned income from a job and meet certain income and eligibility requirements. For example, if you have 2 qualifying children and you earn $40,000 per year, you may be eligible for an EITC of around $5,700. This can be a big boost to your tax refund. Charitable donations can also provide a big tax savings. When you donate to a qualified charity, you can deduct the value of your donation as a charitable contribution. For example, if you donate $1,000 to a charity, you can deduct $1,000 as a charitable contribution. This can save you around $200 to $300 in taxes, depending on your tax bracket. The Child Tax Credit is another tax credit that can provide a big refund to families with children. To qualify for the Child Tax Credit, you must have a qualifying child under the age of 17 and meet certain income and eligibility requirements. For example, if you have 2 qualifying children and you earn $60,000 per year, you may be eligible for a child tax credit of around $2,000. This can be a big boost to your tax refund. Tax loss harvesting is a tax strategy that involves selling investments that have lost value to offset gains from other investments. This can help reduce your tax bill and minimize your tax liability. For example, if you have a stock that has lost 20% of its value, you can sell the stock and use the loss to offset gains from other investments. This can save you around $1,000 to $2,000 in taxes, depending on your tax bracket. The Health Savings Account, HSA, is a tax-advantaged account that allows you to set aside money for medical expenses. Contributions to an HSA are tax-deductible, and the money in the account grows tax-free. For example, if you contribute $5,000 to an HSA, you can deduct $5,000 as a medical expense. This can save you around $1,000 to $2,000 in taxes, depending on your tax bracket. The 20% pass-through deduction is a tax deduction that allows business owners to deduct 20% of their qualified business income. This can be a big tax savings, especially for business owners who have high incomes. For example, if you have a business that generates $100,000 in qualified business income, you can deduct $20,000 as a pass-through deduction. This can save you around $4,000 to $6,000 in taxes, depending on your tax bracket. Finally, it's always a good idea to consult with a tax professional to make sure you're taking advantage of all the tax savings available to you. A tax professional can help you navigate the tax code and identify areas where you can save money. For example, a tax professional can help you determine whether you're eligible for the EITC or the Child Tax Credit, and can help you claim these credits on your tax return. In addition to the tax hacks we've discussed, there are many other tax strategies that can help you minimize your tax liability and maximize your refund. For example, you can consider using tax-advantaged accounts such as 529 plans or Coverdell Education Savings, accounts to save for education expenses. You can also consider using a tax professional to help you navigate the tax code and identify areas where you can save money. It's also a good idea to keep accurate records of your income and expenses, as this can help you take advantage of tax deductions and credits. For example, if you have a home office, you can deduct a portion of your rent or mortgage interest as a business expense. You can also deduct expenses such as utilities, insurance, and repairs. Another tax hack is to consider using a tax preparation software to prepare your tax return. Tax preparation software can help you identify areas where you can save money and can help you claim tax deductions and credits. For example, TurboTax and H&R Block are two popular tax preparation software options. The IRS also offers a number of free tax preparation options for eligible taxpayers. For example, the IRS Free File program provides free tax preparation software to taxpayers who earn below a certain income threshold. This can be a big help for low-income taxpayers who may not be able to afford tax preparation software. In addition to the tax hacks we've discussed, it's also a good idea to stay informed about changes to the tax code. The tax code is constantly changing, and staying informed can help you take advantage of new tax savings opportunities. For example, you can sign up for the IRS newsletter or follow tax professionals on social media to stay informed about tax code changes. Finally, it's always a good idea to plan ahead when it comes to taxes. This can help you minimize your tax liability and maximize your refund. For example, you can consider making estimated tax payments throughout the year to avoid a big tax bill at the end of the year. It's also a good idea to consider tax implications when making financial decisions. For example, if you're considering buying a home, you should consider the tax implications of homeownership. This can include tax deductions for mortgage interest and property taxes. In conclusion, there are many tax hacks that can help you minimize your tax liability and maximize your refund. By using tax-advantaged accounts, taking advantage of tax deductions and credits, and staying informed about changes to the tax code, you can keep more of your hard-earned money. Remember to always consult with a tax professional to ensure you're taking advantage of all the tax savings available to you. A tax professional can help you navigate the tax code and identify areas where you can save money. By following these tax hacks and staying informed about changes to the tax code, you can minimize your tax liability and maximize your refund. Don't let taxes get in the way of your financial goals. Take control of your taxes today.